Happy here, recording video on 17th of September 2022. We will do Nifty's analysis for next whole week, and we'll also check levels for the next session or Monday session. We'll do the analysis based on price action and indicators. We'll check Elliott Wave, and then we'll check the option chain. So let's first check the previous week's analysis. So this was the analysis that we did in a previous week. Here we mentioned the Nifty, if breaks 17,786, then we will drop on the downside, because this was looking like a 1, 2, 3, 4 and 5 wave structure. So whenever we see a 5 wave structure, then comes a pullback towards 0.68 Fibonacci, and from there a dip continues. So we were expecting it to break this 786 level, sorry, but that didn't happen. It opened gap up right near our invalidation level, 17,900. So this is how it went up from this particular point. Okay, from the 9th September closing, it went higher in the whole week. So now this is the updated chart. We'll discuss this in more detail. So during the week also, there was a second analysis that we published on 14th September, which was a detailed analysis. There also we mentioned that Nifty could find support here, then give a small pullback towards 17,850 or 860 levels, and then the dip will continue. But Nifty stayed in this channel. It took the support here and again went higher, right? So this was analysis from 14th September. So from these analysis, at least you can get the levels for support and resistances based on Fibonacci and price action, right? Anyway, we cannot anticipate exact day of fall, and the patterns could change. So this was a little bit of in hurry. We discussed that it is going to drop because there was huge drop in US markets. It opened a gap down, but in first 15 minutes itself, it made a big green candle, right? So this was the candle, right? It is a 2-hour chart, by the way, but on 15-minute chart, you will see that the fall did not sustain. So that gave me the idea that this is the pullback and it is going to continue on the upside. So let's move and check what is happening now, because the price has come out of the channel. So let's first check the price action and indicators. So this is how the price action looking like. So this is the level we discussed also in last week, that Nifty will not be able to cross this. So it didn't sustain near this. So 17,900 and 18,000 we were expecting, sorry, 18,000 and 18,100 we were expecting a resistance. So it looks to have faced the resistance, formed a 333 candle. 3 days it tried to break that, it didn't break, and then dropped, right? So now it has started trading below 13 EMA. So this is 13 EMA, right? And now the next support lies at 48 EMA, right? That is somewhere near 17,300. So a gap down can happen. It can take support near 17,400 to 300 zones, bounce back, and then could drop on the downside towards, let's say, 200 EMA. Okay, 100 to 200 EMA. So in between these, it can drop. So if the correction has really begun, then the drop will continue on the downside. Couple of things to notice here. There is a negative divergence, right, on RSI. This is the negative divergence between the price and RSI. This signals the bearish bias. This low also looks to be broken by RSI. So this is a swing low which it has created during this drop, and now it has broken that. So probably the dip could have started. It's already below 50. So that is a bearish signal. The only bullish signal that we have is on Aron indicator. It turned bullish because from sideways it turned bullish, and this is the move that is responsible for that rise. So it's a basically 25 period Aron. So in last 25 candles, if it does not get the proper results, then it switches. So right now it will be interesting to see whether it will go again sideways like this, or it will give the crossover red crossing green, and then the sharp fall will continue. Bullish case, I a little bit doubt on that. So we need couple of sessions in a next week to see if Aron, to see the direction that Aron points to. So that will be our direction for direction to go. So if it goes sideways, then again the Nifty could go in sideways and break higher. Okay, so I'm having a little bit doubt on that. Anyway, we are having bearish view. That's why we might be biased, you could say, but the things are not in favor of bullish move as of now, looking at these couple of candles. So this is how we look at indicators. Now let's check the Elliott wave. So Elliott wave charts we discussed like this. Bullish case we discussed that it would go higher. So fifth wave made a high just above this. This case is still valid. This chart of a bullish case, which we were expecting it to head higher towards 18,240, did not got complete. It just broken this high and then sharply fell down. Right. So this can be a case where fourth wave still can be in progress. So it went like this, right? So this can be wave A of fourth. Okay, then wave B can be an expanded flat correction like this, and then it will give a correction like this, and then maybe the fifth wave again will come, which will head higher. But this is the bullish case, and we have low confidence on this bullish case because the move here is not looking bullish in a wave one, and this looks to be more like a wave. Sorry, A wave here, B wave here, and this is 1, 2, and then move continue. So this is the chart that we are looking at now, and let me bring you a better picture. Okay, so this is the count which looks to be completed with A wave completed here, B wave completed here. Okay, 1, 2, and then third extended, fourth and fifth completed as an ending diagonal pattern. Couple of signals for that for us is on hourly chart. You see a negative divergence. Okay, so you see a negative divergence from on these 3 points, right? So each one is making lower high. So these are the negative divergence between these 3 points. So this is the point 1, point 2, and point 3. They are going higher. MACD is dropping lower, and it looks to have broken this low. So let's check that. Okay, so this looks to be broken. So fourth wave's low look to be broken by MACD. So this could be the signal that there is a drop. Apart from that, we also discussed from all-time high 18,604, we are in correction mode now with ABC W wave completed here, then X wave connecting, and then this could be a Y wave. So Y wave is still in progress with internal A wave completed here, and B wave looks to be completed here. Unless it doesn't break this high, we should be sure that this could be a regular flat correction with 5 waves going downside as wave C towards 15,000 at least. Even 14,300 is a not big deal. It can come considering the global markets correction, but that's not let's not go there unless we see some big confirmation below 17,000 trading. We should not rush for considering the bearish case, completely bearish case. Okay, so here we say that even if it breaks this, it can be an expanded flat correction in Y wave. That is also possible. So yeah, so the reason for that, for it may not break this now, is that this ending diagonal pattern. Ending diagonal is a termination pattern, and now it will be difficult for it to break this. So it needs to sustain 17,000. It needs to trade right above 17,000 in the next correction. If it sustains that and gives a bigger bounce, then there is a chance that it will break this, and then our analysis could be wrong. For regular flat correction, there is a still chance of irregular flat or expanded flat, right? So this is how we look at the wave counts and the downside probabilities there. Going to the higher time frame, we also discussed a lot of time that Nifty could have completed 5-wave structure with 1, 2 as a leading diagonal, and third wave which is extended wave, and fifth wave here completed at 18,604. So let's now take a closer look here in the ending diagonal pattern. So as I said, this could be a fourth wave completed with WXY. Here internally W, X and Y each are 3 waves move. Let me show that. So this is definitely a 3-wave structure, right? So this structure can be this cannot be C wave. Okay, so this cannot be ABC like that, right? So this is 3-wave downside. So definitely this is going to be W wave, because here there was a confusion earlier. It could have been 5-wave structure with 1, 2, 3, 4 and 5, something like that. but now as this wave got terminated here and it made new high, so this is definitely wave Y and this is WXY correction. So the fourth wave completed here, right? And now fifth wave has completed with a 3-3 wave structure. So from start itself, I had a doubt on this particular rally because this is 3-wave structure and then it dropped on the downside, right? So this was giving us a doubt and this resulted in ABC corrections, right? Right? ABC corrections. So now when you look at it, it looks to be an ABC correction. So I think there is a count is a little bit off here. So let me correct it. So this looks to be a fixed good count for ending diagonal with ABC move. This is 3-wave structure. Then this is double zigzag 3-wave structure. And again, ABC 3-wave structure, ABC 3-wave structure, and finally ABC where the fifth wave C wave is very short or very small. So 3 3 3 3 5 times in ending diagonal is the good structure for us. And here also it has broken the low of fourth wave. This trend line also got broken and this looks to be a wedge structure. So this is a good consideration for us that it is an ending diagonal in the fifth wave and the correction could have started. So the ending diagonal usually comes down like whenever the ending diagonal, which is a terminating pattern, completes, then at least we can expect a low towards this, like it will go towards the origin and then again it may bounce or it can continue the drop. So when you see this structure, you have at least a downside target towards the origin, that is 17,166. So this is going to happen. If it goes beyond 17,000, then we can assume that it will continue the dip and the larger correction could be in progress. If let's see if it sustains and closes below 17,000 for considering the bigger drop. So till now, till then, we can assume that it is going towards 17,000 at least. So let's check the next session's moves. So this is how it started the drop. Okay. So if it's really an impulse structure, it will give small pullback, not a bigger pullback, and the drop will continue because here it looks to be wave 1, 2. Okay. And then internal third wave looks to be completed here. It will give small pullback and the drop will continue. Third wave can end between these two levels. And then fourth will come and fifth will go even lower. And with ending diagonal, when the pattern is ending diagonal, it reaches this point. Okay. When the drop starts, it reaches this point or beyond. So this is 17,161. So somewhere near 17,000 it should go. That's what we believe. So two ways it can go like this. Okay, it will go sharp downside. 2-3 gaps will do the job. It will take us towards 17,000. So if without a larger pullbacks we continue the drop, then we can assume that it is ending diagonal and the up move completely finished here, right? Then the larger dip can be expected. So now how much pullback can we expect? We can expect a pullback up to 0.32 Fibonacci. It should not break that 0.32 Fibonacci. So we can expect up move up to 17,675. If this is broken, then there is something wrong. Okay, then this can be an ABC correction. How can that ABC correction be represented? So just remember this level. If Monday it goes beyond this level, then this drop can be A wave and we could be in a larger pullback towards 0.600 Fibonacci or higher. Okay, and then we could go in C waves downside towards 17,000. Then again a bounce back will come. So this can be another way to consider. So this is the important level for us, 17,675. If it opens small gap up and goes towards this level and then gets rejected, then there is a chance of drop. It might go towards 17,600 and from there it shall drop. So this pullback like this and then break of this swing will give you the idea that the drop could have resumed. Gap down opening is anyway a signal that the weakness is still there and it will continue downside towards 17,300. So sorry, 17,400 to 300 levels. So take the 100 points buffer. It can 17,400 is very good support and it can take support near that and bounce back again for the fourth wave. So this is how we look at it. If it opens gap down, the weakness will continue. If it opens small gap up or flat and then moves higher towards 17,600, then there is a chance of small pullback up to 17,675, and then it could continue the dip. So at least 1 to 2 hours could be spent in a consolidation, digesting this fall, and then the drop would continue. So let's watch first 2 hours of the next session. So things looking a little bit more bearish on the bearish side, with MACD having broken hourly previous lows. So I will prefer to go with the bearish counts. So let's check the option chain. So option chain here obviously will show you 17,500 as a support because there is almost 500 points drop from the top. So on the put side, the biggest number right now is at 17,500. So lower side, we don't see even the support near 17,000. So yeah, this is okay. Yeah, it's bigger than this. So this is major support, but I would consider this as a support for now, because this can be support for a monthly expiry, right? There are 2 weeks, still 2 weeks left, but this will be support for this expiry. If this is broken, then we'll go lower towards next numbers. These are the two numbers where we will go. And you can see here there was a short covering happened on these strikes, and huge call writers added their positions here on all these strikes. So now the resistance, major resistance, is at 18,000, still at 18,000 with 70 lakh call writers open here. And then this is the next major resistance, 17,800 and 900. So range definitely looks to be 17,500 and 800 for me, because these are the second major supports and resistances based on option chain. So it could trade between this and break on the downside, considering this huge addition of call open interest. Okay, so the momentum should be there and it should not cross 17,675. That's what we are assuming for the next few days. So in next week, do watch out these levels and let me know in the comments, what do you think, if we are reaching towards 17,000 or not. So as I said, ending diagonal retraces fully and even goes beyond that if it's a new drop, right? So ending diagonal, if this is the pattern, then we can expect a drop. So that's all. See you in next video. Bye bye.